Assalamualaikum warahmatullahi wabarakatuh, and hello to Dr. Sabarina and my fellow classmates. We are from group 5 and today we are going to present about revenue cycle. This is the list name of our group members. Let me proceed with process involved in the revenue cycle. So the first step in the process receiving a customer order is begin with the receipt of purchase order from a customer or the document that have been prepared from the salesperson. The customer purchase order will contain the information of name and address of the customer and also the good that they want to purchase. The second process is approving credit for sale. This process is to assess the credit risk for the customer. The process includes the review of sale order and customer credit information to determine whether credit should be extended or limited to the particular customer. The third process involved is determine the availability of good for shipment. The inventory in stock must have the sufficient amount for the company to ship. The fourth process is shipping of good. When the good have been shipped to customer, the revenue will be recognized and the bill of lading will be prepared by the company. The fifth process involved is billing the customer. Invoices will be prepared by the company when there is evidence for the shipment of the good. The customer will be billed with sale invoice that include the price and other charges detail of the good purchase. After customer have been billed, the company will proceed with collecting the cash from the customer. The company may send monthly statement to customer that provide their detailed activities from the previous month. The amount cash received by the company will be recorded in sales journal and subsidiary ledger. The last step involved in revenue cycle is recognizing the effect of the cycle on other related accounts. The example of other accounts that need to give attention are bad debt expenses and sale returns or allowance. So what is the source document involved? The first are customer purchase order or sale order, bill of lading, sales invoice, remittance advice, bank deposit slip, return of allowance request, credit memo, and also credit approval form. Next, I will proceed with journal entry that related to revenue cycle. So the first one is sales journal. The sales journal is used to record all the company that sell in credit. So this is the example how to record in sales journal. So the second journal involved is cash receipt journal. This journal is used to record all the cash that coming into business. This is example of cash receipt journal. So the third journal is a general journal. So this journal is used to record transactions that are not included in specialized entry. So example of related account is account receivable, inventory, bad debt expenses, and also sale returns or allowance. So account involved in the revenue cycle is can be divided into two, which is a directly affected account and also indirectly affected account. For sale transaction, account affected is sale, account receivable, sale discount, and also inventory. Cash receipt transaction involve cash, sale discount, and account receivable. For return of sale from customer, it involves sale return and allowance and account receivable. For estimation of bad debt expense, it involves allowance for the full account and also bad debt expense. For indirectly affected account, the account involved is warranty expense, warranty liability, and also sale commission expense. Okay, so let me show you the revenue cycle flowchart. So first one is when order is received from customer through phone call or faxes, company will then prepare the sales order and transfer the information to credit department to check the eligibility of customers' credit. So after it have been approved, goods will be selected and the information regarding the total amount to be billed will be generated. So shipping department will prepare the good to be shipped accordingly and bill of lading will be prepared. Okay, and then stock controller in the company will manage the inventory and update the stock. So later on, the transaction will be recorded in sales journals and all the information regarding the AR will be updated. All the information regarding the account receivable will be updated accordingly and will be then transferred to general ledger. Okay, so this is the end for my part. I will pass to Abid for the presentation about the internal control and also the risk area that involved in the cycle. Thank you.
I'm going to talk about the process of internal control in revenue cycle. Firstly, authorization. All the revenue and cash receipt transactions must be authorized properly. The person perform any particular business activity must be properly authorized for his job. Secondly, supervision. The internal supervision functions must maintain a close relationship with business control system. Direct reporting line must be established between the internal control and supervisory bodies because it helps them to check the work done by the employees. Thirdly, segregation of duties. Segregation of duties meaning separation of duties. It helps business to reduce risk of occurring fraudulent activities in the business. Fourthly, access control. Business need to control the access of other people in some place or department. Like for accounting department, only accountant can access. Next, independent verification. Independent internal verification involves the review, comparison, reconciliation of data prepared by the employees. Verification should be made periodically or on a surprise basis. Finally, accounting reports. Business need to make the employees responsible for their work. Business need to separate the duties of the employees. Like the cash will received by one person, the record of these transactions should be done by different persons. And finally, the cash will be held by different person. Business must keep documents of the regular transactions like deposit slips or cash register slips. Then it also need to do internal verification by auditor or supervisor. At the end, if we think about the risk area of business, we need to think about the situation where revenue is overstated by business. Sometimes business overstate revenue to show others that they are doing well. Some business don't want to record the cost of after sales service. It also overstate their revenue. Some business record fake sales, so it seems like they are doing well, but their actual sales is quite low compared to the revenue they showed in the financial statement. Sometimes business records sales in the wrong period, like they sold the product in 2021, but they record the revenue in 2020. Next, allowance for sales return may not be recorded or recorded in less amount. And finally, the fraud risk of doing fraudulent activities by the employees.
Next, in this slide, you can see the important assertion and the relevant audit procedure for the revenue cycle. The first assertion is completeness. Completeness is used to ensure that the revenue that should have been recorded during that year have been recorded. So possible misstatement that might be occur is a good ship and revenue are not recorded. Example contract activity that can be done is a sales invoice reconciled to the daily sales report. And the relevant audit procedure that can be implemented is a testing of a sample of daily reconciliation. Next is accuracy. Accuracy is to ensure that the revenue has been recorded appropriately. Possible misstatement that might be occur is a revenue transaction not posted correctly to the sales journal. Control activity that can be done is a daily posting to sales journal reconcile with posting to subsidiary ledger. And relevant audit procedure is a examination of reconciliation of sales invoice to daily sales report. Next is a cut-off. Cut-off is used to ensure that the revenue has been recorded in the correct accounting period. The possible misstatement that might be occur is a revenue transaction recorded in the wrong period. What can be done by the control activity is do a daily billing of the goods shipped, and relevant audit procedure that can be implemented is a comparison of the dates on sale invoice with the dates they were recorded in the sales journal. Next is occurrence. Occurrence is to ensure that revenue has been recorded have occurred during that year. Possible misstatement that might be occur is a revenue not recorded goods not shipped, and the service not. Example of the control activity is a sales recorded only with approved customer order and the shipping document, and the relevant audit procedure that can be implemented is a testing of a sample of sales invoice for the presence of authorized customer order and shipping document. The second last is a authorization. Authorization is to ensure that the revenue has been authorized. The possible misstatement that might be occur is a good services and the ship perform for a customer who is a bad credit risk. The example of the control activity is a proper entity procedure for authorizing credit and the shipping of goods, and the relevant audit procedure that can be implemented is a review of entities procedure for granting the credit. Next is a classification. Classification is to ensure that revenue has been recorded in a proper account. Possible misstatement that might be occur is a revenue transaction not properly classified. An example of the control activity that can be done is a chart of accounts, and the relevant audit procedure that can be implemented is a review of sales journal and general ledger for proper classification.
We try to find major factors affecting the client business risk, and also we try to find our audit risk. Firstly, I am going to talk about the business risk of this business. Firstly, they do not have enough cash right now, so it's quite hard for them to maintain cash related activities. Secondly, high debt. They borrowed money from two banks and they didn't able to pay their debt on time. Thirdly, unable to take loan. Our client applied for bank loan, but bank rejected their application, so they do not have enough cash and they cannot collect money from outside. Fourthly, competitors. A modern hospital is under construction near the city. So we are thinking that the business will lose their loyal customer near future. So maybe business will not be able to follow the going concern. Now I am going to talk about audit risk. So under the audit risk, there are inherent risk, control risk, and detection risk. So firstly, I am going to talk about the inherent risk. We need to see are they charging correctly to their patient or not? Do they have any service charge? I mean fixed service charge for their hospital? We need to check it, and how they collect the service charge. Secondly, pharmacy. Do they have any pharmacy in their hospital? And if they have pharmacy, then how they collect the medicine, how they sold the medicine, and how they record the sales return of uh, the medicine. Thirdly, result from previous audit. So we need to check the previous audit report and we need to find that where we need to focus more. Fourthly, managing cash activities. We need to check that how they manage their cash, who record the daily cash transaction, cash receipt or cash payments. Do they have enough documents like bill for bill payment? They have bill record or not, and who hold the cash. Next, admitting and registration of patients. We need to see the process or and requirements of admit a patient. And lastly, laboratory. We need to check are they maintain the standard given by the Malaysian Health Ministry. Now I am going to talk about the control list. As we can see that they have shortage of accounting personnel, so it's quite hard for accountant to record all the transactions correctly because they have lots of work to do, and uh, they do not have enough people to do the record. Secondly, no internal verification. This business do not have any internal verification. So if the accountant make any mistake, there is no one who can tell them to correct their mistakes. And the thirdly, negligence about work. So in this business, they do not have enough accountant. So negligence about work is very simple because they have lots of things to do. Now I am going to talk about the detection risk. So for this case, the detection risk is quite low because the internal control risk is quite high because they do not have good internal control. So there will be a large possibility of material misstatement. And to uh, we tried to collect evidence from the patients, but most of them didn't respond. So we are afraid that maybe we will not get enough evidence to find material misstatement.
The third question is, in this audit of sales and collection cycle, which type of tests are you likely to emphasize? For the sales and collection cycle, we choose test of control. Test of control is the audit procedures performed to test the operating effectiveness of controls in preventing or detecting and correcting the material misstatement at the relevant action. It also used to reduce the excesses of the control risk. Test of controls that can be implemented for under the sales and collection cycle is authorization of sales recording by obtaining supporting documents to verify whether the sales order and dispatching documents have been approved before the sales are recorded. Secondly, segregation of duties by verifying whether the person who takes the orders and the person who record the sales and the person who receive the payment are a different personnel. And lastly is completeness of revenues by verifying the numerical sequence of invoices. The last question is, for each of the following, explain whether you plan to emphasize tests and give the reasons. First is test of control. We plan to not emphasize this test because we know that the test of control is obtained to get the sufficient of the evidence to support the assessment. However, we only perform the test of control if we intend to rely on the client's internal control to reduce the risk of the material misstatement. Besides that, when the internal controls is operate effectively and efficiently, thus the test of control is not required. In this case, the hospital has excellent control over the cash and the likelihood of fraud is extremely small. That means the internal control effective in preventing, detecting and correcting the material misstatement that can occur in the revenue account. Second is substantive test of transaction. We plan to emphasize this test because substantive test of transaction is mainly focused on the sales and cash receipt transaction. In this case, we know that the hospital did not know the purpose of confirmation or their correct outstanding balance. In fact, the hospital need to know their cash distribution in order to pay the debt. If the cash is less, the hospital may not be able to pay the debt. Thus, the hospital can bankrupt. The third is analytical procedure. We plan for not to emphasize this test because we know the analytical procedure is used to evaluate the financial information through analysis of possible relationship. It also used for planning and review the stage. Analytical review comparison are based on the expected plausible relationship among the data. Inferences does not necessarily indicate errors or fraud, but simply indicate that needs for further investigation. For example, we take asset turnover ratio and days sales outstanding. We know the asset turnover ratio is to measure the company's ability to generate the sales from its asset, and day sales outstanding is to measure the number of days it takes for a company to collect the cash from its sales. So for the relationship about these two ratio, if the asset turnover ratio is high and the day sales outstanding also high, it shows that the company direct the sales more on the eventually a part of the asset rather than the account receivable. It is because company takes more days in order to collect the cash from its account receivable, and maybe they collect the cash after the end of the accounting period. So the so if the asset turnover is high, it's not because of the company generate more cash from the account receivable, but it is from the inventory, because inventory also the part of the asset. And lastly is a test of details of balance. We implement to emphasize this test because according to this case, the hospital has unintentional error in billings, recording sales, cash receipt, account receivable, and the bad debt. They also has no time for internal verification or careful performance. In this audit revenue, test of details usually focus on the existence of revenue, completeness of revenue transaction, the evaluation of the revenue record, and the rights and obligation. For existence, it is confirmation of the selected account receivable. For completeness, review the result of testing the completeness assertion for assessing the control risk. Valuation is examination of result of confirmation of selected account receivable, and lastly, right and obligation, which is inquiry of management to review any loans agreement. So that's all for our presentation. Thank you for watching.